welcome to another episode of Shooting
the Shit with Rachel
and Neal Young. So we're talking all things real estate photography business growth, mindset, and getting it done. Here come your favorite true entrepreneurs, Rachel and Neal Young, shooting the shit.
I have a ferret on the podcast. Like if we're kind of in a slump, like what kind of things do you do?
Talking about a boob light.
Straddling a power line.
Nice photo.
Ooh, I need that.
I'm like red right now because I'm embarrassed. I go like this. I love it.
Come in.
Sure, use your podcast voice.
You know, over here, I'm kidding out.
Drone's like flipping to the ground.
That's a great callback.
Chit-chatting.
Is that what you call that? Hey!
All right, we've got a treat for you today. We've got Brandyn with us again, who, if you recall, was on an episode previously. Brandyn with BMC Tax LLC, and he's going to help us with all things tax, which I know probably all of us, definitely I struggle with every year, an ongoing challenge. And Brandyn also has some exciting, interesting potential changes coming that we should probably know about. This episode is brought to you by my admin. Well, HD Photo Hub, which is basically like having an admin.
That's right. And it's not just a delivery platform. It's a powerhouse designed to make your work shine. From stunning teaser videos and social media reels to custom property websites and polished printable flyers, HD Photo Hub automates it all so you can focus on what matters, growing your business.
That's right.
Yes.
And then Rach and I just have a couple ideas to ask as well. So Brandyn, say hello.
Hello, how are we today, guys?
Good.
Doing great. So in case they haven't, what's that?
So glad to be back.
Yeah, for sure. And in case people haven't seen the previous episode, can you just give them a top level spiel about you and your ninja level accounting and tax knowledge?
Yeah, absolutely. So I'm an enrolled agent. Most people don't know who we are until they really screw up with the IRS, because we do the brunt of all of the representation with the IRS and different state tax authorities. So we're the only ones that actually are credentialed by the IRS to represent taxpayers at any level. So I work with people on tax return preparation, guidance, strategy, representation for audits, examinations, bookkeeping, payroll, and I work in every single state. So unlike some other professions, I'm not state bound. I'm bound by the Internal Revenue Service. So I'm nationwide. I've got clients in every single state. I primarily focus in real estate and small business.
Cool. You said nationwide. I had the nationwide theme going in my head. I'm like, Brandyn Cox is on your side.
I might have to take a sound clip for that later.
A good ad for you. Yeah, Brandon's been my accountant for, gosh, I don't know. How long now, Brandyn? 4 years?
Yeah, it's like 4 or 5 years, give or take, something like that.
Yeah, he's been fantastic. Anytime I get anything in the mail, I take a picture of it and send it to Brandon. He's like, I'll take care of it. I'm like, thank you. You're the best.
That's awesome.
Yeah.
So tell us, there's some new bill coming, or what should we be aware of that's coming down the pipeline here related to taxes?
Right. Yeah. So currently, as of June in 2025, we have the big beautiful bill, as it is so well put, as it's actually what it's called too. I thought it was kind of funny that everyone was referring to it as that, but that's actually the name of the bill. It's the big beautiful bill, and right now it's actually sitting in Senate, so it's already passed the House. The Senate has already started to make some changes. I'm not a political science major, so I can't really tell you whether or not some things will stay, some things will change. The only thing I'm going to talk about today would be things that are actually in the bill. And obviously, we still got, quite some time until this is actually expected to pass. Trump wanted this to be done by the 4th of July, which is like a week and a half away. So I don't know that we'll get it by the 4th of July, but sometime probably in the midsummer, we'll actually see this become law. And there's going to be a lot of changes, and I think most of them are very beneficial to business owners. So people that are probably going to be listening to this podcast, I think probably one of my favorite aspects of this one is the QBI deduction. So this is something that's already in play now as for small business owners. It's called a QBI, meaning qualified business income. So qualified business income generally is just some type of business income or pass-through business income. So if you have like an S corporation, a partnership, or a sole proprietorship, right now you can take up to 20% of your profit for the year and write that off essentially and not pay income taxes on it. So like if you made $80,000 for the year, you're going to get a $16,000 deduction on top of your standard or itemized deductions that you're not going to pay taxes on. But the new bill, the big beautiful bill, changes that from 20 to 23%, which is, it doesn't sound like a lot, but when you consider the length of years that this bill is going to be here for, I mean, that's going to be 10, 20, 30, $40,000 more each year for some taxpayers. You know, it only increases as you make more money. And I think that that's going to be a really great thing.
That's great. I like it.
Big
Right.
and beautiful. Yeah.
Yeah.
Yes.
So big and beautiful. Are there, tell us more, please. Please.
Yeah, absolutely.
Psst. Sorry to interrupt. If you haven't heard, Rach and I are using Pixl CRM.
Pixl CRM isn't just another boring tool. It's basically your business's best friend. With Pixl CRM, you can automate your lead generation, follow-ups, client communication, and stay top of mind with email campaigns. And there's just so much more.
And if you want, you can try it out today. Just go to pixelcrm.com/STS and you're going to get the first month of Pixl CRM free.
So, you know, and this may not apply to all people that might be listening, but some people do have employees that work for them other than just themselves in the company. So they did come into the no taxation on tips and no taxation on overtime. And the way that they wrote it, I like it and I don't like it. So I like what they did and the fact that this is not going to be like a payroll concern. So as the employer, you don't have to do extra calculations to figure out how much you need to not withhold for federal income tax on overtime or on tips. It's still going to get taxed just like it normally would. It's on the taxpayer when they actually file their tax return at the end of the year to take a deduction for if they had overtime or if they made tip income. And that is something that, you know, especially in, you know, in photography or real estate, you guys will definitely see is at least tip income potentially. So that's something that you can also, you know, kind of steer away from on paying income taxes potentially coming up.
Good to know. We have a tip line, like our clients can tip us,
Yeah.
but they're contractors, and that tip goes to the contractor. So I don't have to worry about that because they're contractors, right?
Right. And for contractors, it'd be different. So this would only be for actual W-2 wage employees. So for a contractor, whether it's tips or like a commission or earnings or whatever, to the IRS, it's all just revenue. It doesn't really matter what you call it. It's all just revenue for them. And then they take their deductions for business expenses and they get taxed on their net profit. But even if you did have a wage employee, you still personally would not have to worry about this as the business owner. That's for them as the wage employee to worry about on their own tax return.
Okay. Cool.
Yeah. Now, the downside of it is that there's actually a ton of limitations. So, one of the limitations is one, you have to be someone that would normally be qualified for overtime. So, they took the Department of Labor's standards for who qualifies for overtime, which I knew it was going to be too good to be true story when, you know, Trump was running. I was thinking no taxes overtime. I'm like, that's great. I'm about to not pay taxes like ever because I work a crap load of overtime, especially during tax season. However, people that are in like a profession such as mine don't qualify for overtime. So my wages, I'm still going to pay taxes on those anyway. And those that are working, what's that?
Who does qualify? How do they classify that?
Yeah, so I mean, there's an entire like chapter section of the Department of Labor's code, but generally you can think of people like the blue collar workers, tradesmen, those type of people that are going to work and they have overtime, or you know, you could work retail and have overtime. Typically, retail is not going to let you get overtime, but a lot of times in the construction industry, it's very easy as an employee to get overtime.
So we can't just pay ourselves overtime as business owners and not get,
Yeah,
not get charged.
some you can, some you can't. It just depends on if your profession specifically qualifies, you know. And I haven't made this like a talking point for my clients, for current clients of like, hey, we need to start running more in payroll for overtime and change you from salary to hourly because it's not law yet. We don't know what will still be the final changes. You know, and same thing on tips. It sounds really great, but another one is that it only counts for those that are normally receiving tips. So think of like food service workers, right? Like waiters and waitresses. Those people typically get tips. Barbers get tips. But like normally someone that's in the real estate profession is not going to get a tip. So those people unfortunately don't qualify for that.
Mm, yeah.
Interesting.
that edu, that was a tip. That.
Yeah, right. Exactly. If only it would be that way.
Yeah, yeah, yeah. Okay, interesting. Are there any other parts to this big, beautiful bill? Not to be confused with your neighbor who might be named Bill,
Right.
who's also large and beautiful.
Yes. Very beautiful. The best. So I think one of the other ones that's really good, and this is actually causing a lot of issues actually in the Senate right now, where they're trying to make changes to this, is what's known as the SALT limitation. So SALT stands for state and local taxes. So on like your individual tax return, if you itemize right now, regardless if you're single or married filing joint or where in the country you live, the most you can itemize for state and local taxes, which would be your state income tax withholdings and real estate taxes on your primary and personal property taxes. That's capped at 10,000. They want to change that to 40,000, which would be fantastic for a lot of taxpayers that are living in high tax states like New York or Vermont or Connecticut, California being another one of those. Fortunately, like Rachel, I know you're in Washington, so you don't really ever have to worry too much about the SALT because you guys don't have any income tax. But property taxes, if they're over 10,000 for you, that is currently limited, but it might not be for a good amount of taxpayers going forward. And that's only going to help people reduce their taxable income for sure.
Hmm.
That's great.
Yeah. I think the last thing that's like awesome, I guess, about this big, beautiful bill is a thing called special depreciation, commonly known as bonus depreciation. So this is a big ticket item. And this is going to start as of 1 January 25. So this is a retroactive fitting law if it goes through, and it goes all the way through 2029. So right now, and I'll explain how it will be relevant afterwards, is that bonus depreciation is currently 40%. And then in 6 months, when it goes into 2026's tax year, bonus depreciation is gone. So bonus depreciation is like, think if you purchase a like an SUV, a vehicle. Let's think of that like someone that needs that for work. Let's say you buy, a $70,000 Lincoln Navigator. Well, right now you can only bonus depreciate 40% of that. That's $28,000. So 60% of the cost of that vehicle still isn't really getting depreciated in its first year. You don't get a whole lot of, damage against your income taxes on it. But they're going to go back to 100%. So that means that $70,000 Lincoln Navigator, you can write off all $70,000 in that first year, which is great. Like that's something that's going to really reduce taxable income for sure. So I think people are going to want to probably purchase vehicles and other assets in the next couple of years.
Hmm.
Sweet. I need a truck.
Yes.
She needs a pickup truck so she can go pick up her
No,
mule.
I'm gonna drive it to photo shoots and put all my
Yes.
gear in it, Neal. Come on.
Your camera, your photography mule that helps you, your mule that helps you carry your gear.
And if you didn't know, I just traveled down to Southern Oregon to look at a mule to buy. And if all checks out on Monday at the vet check, we're gonna bring her home. So
Sweet.
yeah,
That's
Yeah,
cool.
very cool.
One thing about your vehicles, though, sorry, I got to make sure I put this in, or someone's gonna come at me later for it. Is especially for vehicles, you want a vehicle that's going to weigh over 6,000 pounds gross unloaded. And that's why you don't see people buying like Ferraris and Lamborghinis to get like a $300,000 tax deduction, because there's a limitation that if their vehicle does not weigh 6,000 pounds or more, then your first year's bonus depreciation is significantly limited. Like you can only write off like 20 grand in the first year versus that $70,000 if it was a Lincoln Navigator versus like one of their sedans, for example. So that, you got to definitely make sure you pay attention.
yeah, for sure. And it's like the car I just bought last year was like 5,971 pounds.
Yeah, it's like,
Why
oh,
wouldn't they have just added 10 pounds? Like, seriously? I'm so annoyed. Oh,
You're like, what if I add a roof rack? Does that count?
I'm loaded. So no, unfortunately.
yeah.
I mean,
Unfortunately, it's got to be an unmodified stock vehicle for it to be part of the gross unloaded weight.
Yeah.
I mean, I understand a lot of the trades require a bigger vehicle and that's
Yeah.
why they require that, but there are still a lot of companies like house cleaners that have a whole fleet of vehicles. Why is it that they have to be over 6,000 pounds? Do you know?
I'll be honest with you, I'm not 100% sure what the reasoning or logic behind that is. My assumption is that the whole point of that was to limit people from buying the very expensive luxury vehicles. So that way you're not riding off like a Rolls Royce and you're barely using it, right? You only drive it 200 miles a year. You just happen to use those 200 miles for business and you
Mm.
write off some very large, significant amount of tax deduction. That's probably what the IRS is really looking at limiting.
But I could still get a Humvee or a tank.
Yeah.
There you go.
So
Just
I'll show
use
you.
F-350.
I'll be flashing my tank on Instagram. Check out my tank.
Just make
Check
sure
out.
that if this bill passes, that at least the way that it's currently written, nobody goes out and buys any more EV vehicles. Boy, that is a tongue twister.
Yeah.
At least for tax credits, they're cutting all of those tax credits for the electric vehicle credit, the
Really?
residential clean energy credits, all of that stuff. The what's called green credits are going to be gone.
Mm.
Huh.
Yep.
Do you know why that is?
That's it's a political
All
issue. So
political stuff.
yeah,
Yeah.
Republicans don't want to subsidize the green movement, so to speak, of like geothermal, wind, turbine, solar, all that stuff, which is kind of surprising when you look at how he hired, Elon Musk on the Doge plan, and he's kind of killing his industry with this.
Yeah.
Interesting. I so don't follow any of the politics. I'm clueless, but that's
Yeah,
interesting.
I really don't either. And I definitely don't like give my idea of what I think is politically right ever to any of my
Right.
clients because it doesn't matter. But yeah,
Right.
it's hard to keep up with it anyway.
Yeah,
I think
totally.
Elon has enough money. He doesn't really care at this point
Probably not.
what happens.
Yeah, it must be a nice problem.
Right?
Mm.
I
I
know.
don't know if Elon would agree with you if he heard this podcast. He'd be like, well,
Actually.
hang on. I could use more. There's more I could do.
Yeah.
Um,
I did want to talk about a little bit about vehicles because I know a lot of real estate photographers do buy vehicles
Oh yeah,
for their company. Are there, I like, let's say I bought a 6,000 pound car
yeah,
and would I have to separate out the miles that I drive for personal versus work? Kind of like how I
yeah,
track my miles now for deduction. Like if you only used it 80% for work, could you only deduct 80%?
yeah. That's a really good point. So there's two different ways to use your vehicle for business deductions. So there's the standard mileage rate, and then there's the actual expenses method, both of which you really need to have a regular and contemporaneous log to show what your trips are for. I recommend using like Mile IQ. I call it like the Tinder of mileage apps. You swipe right for personal and swipe left for business, and it keeps track of everything for you on the background. So it's really simple. The problem that a lot of taxpayers have that I see is that there's three types of miles and people usually forget about the second one. The first one's really easy. It's personal, right? So like if you go to the grocery store and go buy your groceries, that has nothing to do with business. The next one is the one that people forget about all the time. It's called commuting miles. The IRS does not allow that to be considered a business mile. So, like when you drive from your house to a client's house, whatever, right? That's a commute trip. That is still considered non-deductible or non-business use mileage. Now, if you leave that client's house and you go to another client's house, that's a business trip. And then as you keep going throughout the day for the business, those are all business. And then on your last trip back to your home, that would be a commuting mile. And it's really low hanging fruit for the IRS if they want to audit someone's mileage log. If they look through and they don't see a single commute trip, they know that they're about to cash in on tax deduction losses for that taxpayer. So make sure that you're differentiating the difference between those three types of miles.
Does the
that's
Mile IQ have a third category? Because I use
that's
Everlance and it only has two.
that's what I was gonna
Yeah,
ask.
I would call it still personal at that point because I mean it's treated like personal.
Okay.
The only reason the IRS has a third category for what's called commute miles is to make the distinction of the travel from your first place of work, your home, to your next location is a commute mile, and they don't want to make sure people aren't calling that business. That's the whole point behind that. Most mileage apps will just have business and personal, and that's it. So I would just call it personal miles.
Okay.
So
Well, I
does that
didn't.
mean if somebody who always commutes to work, if they always go to the same location, that they can never write those miles off?
Yep, unfortunately. So like if you have an office that you work of, for remotely and you don't really travel anywhere else, a vehicle expense is really going to be limited if non-existent for you, which I'm in the same case. I work remote. Like I don't go meet my clients out in Alaska just because I have Alaskan clients. So it'd be great to write off my 24 Suburban, but I can't do that,
Mhm.
unfortunately.
Yeah. Rach, did you know that listeners can use the code STS to get 10 free full deliveries. That means 10 complete marketing kits with HD Photo Hub.
Yes, and that includes property websites, videos, flyers, and more absolutely free.
And what I love is I can set it up so that the clients have to pay before they can even download their photos.
Oh, that's the best. No more chasing invoices. And the online ordering has saved me so much time with back and forth text and emails. It's just automated.
Use the code STS to get 10 complete marketing kit downloads now.
Okay, so a lot of us will put like stickers on our cars or wrap them or,
Mhm.
is any of that, if it was was any of that required, or does that help with taxes in any way to mark your car?
That's a good question. So you would think so, right? So like the argument's there to say that like I'm currently advertising my vehicle, that's why it's driving around. However, I mean, there's an entire what's called audit technique guide surrounding like small business deductions and mileage.
Mhm.
And that's like a playbook for internal revenue officers to use to say, hey, how can we properly audit this person to get rid of these deductions? And they're public information. I mean, you can Google them as well too. But one of the things they talk about in those audit technique guides is that exact example of I'm going to put like a BMC tax LLC sticker on my car and now I'm advertising. So all of my trips are business.
Mm.
Unfortunately, that doesn't stand in tax court. I'm fairly certain there was a tax court case some years back regarding this entire situation. They still deem that as no, that is not a business smile. Now, the cost for that sticker or the wrap or whatever you did, the modifications to the vehicle, those are still deductible as a business expense, but it doesn't make your vehicle 100% business use on that one stance alone, unfortunately.
Okay. Well, I could wrap my car and make it look great.
Yeah.
Not really worth it. Okay. I've considered it, but then I'm just like a rolling billboard. Like, I have $10,000 worth of gear in my trunk. Please break in.
Right. Yeah, exactly. That, and God forbid you cut someone off in traffic and then it's
Oh,
just
yeah.
like now you're canceled on TikTok or something.
Have a negative review.
Yeah.
That's funny. Did you have any other questions about the vehicle stuff, Rach?
Not that I can think of. I didn't know about the commuting thing, so I'll be swiping left more than right. Dang it.
Yeah.
Yeah, Everlance has been great. I am actually keeping up with it this year because last year I didn't do it all year, and
Yeah.
I was days. I just like on my spare time just go through and
Oh, yeah. That's
Yeah.
what I
Even
just,
if you keep up on it like once a week or every other week, it makes life a lot easier.
yeah, mine
yeah,
keeps popping up reminding me to open the app when I'm traveling. I'm like,
yeah.
oh yeah, I gotta classify these bad boys.
I did the same thing on Mile IQ at the end of the year. I'm like, oh no, like I had to go through so many of these. And then when you're looking at the addresses, I don't know what address is this. I don't know what this is anymore. So now I'm trying to do it every day. So when I actually remember where I went, you know,
Yeah.
Yeah, absolutely.
even the ones that I should know, I have to like zoom in on the map and go, oh, that's Home Depot. Like,
Yeah, no, of course. Right.
you know, oh, that's funny. Well, the question I want to ask you this is like, every time it comes to, tried every year, it seems it's either my wife will do the taxes or we try somebody else to help us with the taxes. But I feel like every time you just feel like you're just taking a gamble. You don't know if this tax person is really doing what they're doing because we don't know taxes well enough. So you
Right.
just have total faith like this person's doing what they should, or are they missing something huge? And this year we felt like that again when well, $30,000, and we're like, well, how is that possible? Because we are not living a lavish life,
Right.
and we don't have money for 30 grand right now. And I feel like you're at like a racetrack, and it's the first time you ever even saw a horse in your life, and you're like, well, here's 20 grand. Hope it goes
Yep.
well. You know what I mean? How can you actually, besides, I mean, obviously your qualification, I think, would be a better gamble, but like, how can people know, or is there any information to help them understand a little better what they should be looking out for? And on those lines, I want to get to asking you just, some basic questions about what we can do to just make sure we're not just paying money that we maybe just shouldn't have to pay, you know?
Right. Yeah, absolutely. So I think vetting your tax accountant is really important. Like you can't just go off of someone you Google real quick and you're like, look, closest tax accountant possible. Like that's not going to be a great idea. Google reviews are great. I don't know that they're perfect, obviously, because anyone can pay for those, I think sometimes. So I'm not huge on using like public reviews. Word of mouth can be useful, but you got to you got to take it with a grain of salt on who you're getting that advice from, right? Because not everyone's referrals are great, unfortunately, because I hear that a lot of times. I'll work with someone and come to find out that tax preparer made mistakes on like 30 different people's returns, and now that person's I have 30 different new clients now because this guy made huge grievous errors, right? So word of mouth is okay, but it's not the only thing to rely on. I think professional designations to start with, or at least the first thing you should look at, someone that's like a CPA or an EA, which is that enrolled agent. Those are good places to start. And I also think the way that you interact with your tax accountant is important. So if they are able to explain to you the entire return so that it generally makes sense, like they're not trying to use fancy, jargon in this section and that section, they make it easy enough for you to understand what's actually happening with your tax. I think that's really important. I think of it just like if I go to see a doctor, right? Like if he just tells me all these medical terms, I'm not gonna understand what the hell he's talking about, right? Like I didn't go get a degree in becoming a doctor. I did that for accounting. So you got to make sure that you understand what your tax accountant's talking about. I think that's probably one of my favorite aspects when you're vetting really any professional. I think that goes for attorneys, physicians, tax accountants, mechanics,
Mhm.
even. I think
Yeah,
that's
that's a good
that's a
point.
really big one.
That's a good point. Yeah. Um, so so I was just listening to a podcast, and this may not, I don't know if it falls in your area of expertise or not, but I thought it was very
Sure.
interesting that they were just talking about how the richest of the rich are paying like 7-8% for their taxes because they have all the benefits of all the best people and all the best tricks, and also that they are not just making all their income off of earned wages, that they're making it
Right.
off of investments, and that the sooner you can put your money somewhere is where you can start sort of evading what you have to pay
Sure.
taxes. And I guess my question is, you know, if that is even the right path, any thoughts or and maybe even just from experience doing taxes for some of these businesses, what are some of the trends you see that help certain businesses lower the taxes that they have to pay? And what are some things that small business owners like Rachel and I that have photography businesses might want to start thinking about, for like a phase two, to start, moving their money to investments or something like that to save what they have to, so to not have to spend 60 grand, 70 grand every year or whatever it might be.
Yeah, it's a good question. So I think the definitely phase one is just working on making the money, right? And I think that's why you said something about phase two, and that makes sense because phase one is, boots on the ground, get the business running, make sure people are paying you, and
Hmm.
you're staying afloat and your bills are paid. Phase two should be more strategic, and I think that's more thinking along the lines of, you know, um, how do I structure my company? Do I need to be an S corporation? Do I just need to stay a sole proprietorship? Do I need to make strategic moves like buying a vehicle? Is it really that necessary? What are the benefits and what are the not so great, uh, you know, perspectives of buying a new vehicle just for taxes? And then also things like retirement accounts, investing in real estate, other types of brokerage accounts, and other investments that you can make that'll help gain wealth, build income, but reduce your taxes at least a little bit if you can at all. Real estate is just in general owning real estate, like rental real estate can be a really good aspect, but it's not for everybody. Real estate has income limitations. If you make over 150,000 for the year, losses you get on rental real estate aren't going to offset your other income. So, what works for one, unfortunately, doesn't work for the next person next door. So, like, what works for Rachel may not work for Neal or vice versa. And that's where you got to work with your tax account to make sure that you're getting more of like, hey, these are my questions. What do I need to be doing? And sometimes you're already doing about as much as you really can without spending money. Like I'm not a huge fan of what's kind of called as the spend down strategy. I would rather give Uncle Sam a quarter. I have 75 cents. I'm good with that rather than he gets nothing and I got 30 cents. What's the point? I have less money, right? And that may come as a shock to some people who hear tax accounts say, well, he said pay the government. Well, yeah, I still have more money if I do that, right? Sometimes that might still be the right answer too, is that you overall have more money. It's all about how you look at it in your perspective of what paying less in taxes really looks like for each taxpayer.
Yeah, that's true. And you're really just kicking the bucket down the road. You're gonna have to pay taxes eventually on a lot of those investments. Like when
Yes.
you pull the money out or when you sell the property, unless you roll it into a 1031 exchange, and then you're
Yep.
really just kicking it down to whenever you end up pulling that money out, you're gonna have to pay taxes on it. And it's
Yeah.
Right. Exactly. It's
probably
just like
gonna
retirement accounts.
Well, I thought that was interesting too. They mentioned that too. I think they said Jeff Bezos, maybe. I don't know. They said somebody like Jeff Bezos had all these things, and of course, then decided to move to Texas for family reasons. But really, he was just
Yeah.
moving to Texas because he was going to sell a bunch of stuff, and
Didn't
the
want to hit
taxes were lower.
California.
Yeah, yeah, the taxes were lower, so he moved to Texas. You know what I mean? For lower taxes, basically.
Yeah, absolutely. Like
Uh,
some of those, some of the like ultra rich, the people that have like tons of money, it's a lot easier for them to go about without paying taxes because they could take like this is what most of the rich people will do is they'll take their stock that they own in the company and they'll leverage that for a loan from the bank and they'll say, I'll use my securities and my stock ownership and you give me a $2 million loan. I'm gonna go live off of that money. And I don't really have any responsibility to actually pay that money back because they're making money on my stocks essentially. But, like people like us, like your average American is not going to be able to go to Bank of America and say, hey, I'm going to give you guys 20 shares of BMC Tax LLC. They're like, we don't care. Like that doesn't mean anything
Yeah.
to
Yeah, they were talking about that. That they actually mentioned that in that podcast too. I thought it was really, I'd never heard of that. It's really interesting that you would, yeah, invest all your money into these stocks and then take out a loan against it. And they said, so long as you never sell those
Yeah,
stocks, you're not going to be taxed on that part of it. So interesting. Hmm. Yeah. I just wonder what are we missing? Are there any just for us regular businesses that are still, all of our money is, from actually the work that we do.
yeah.
Um, should we make sure that we're doing to decrease our liability? What are maybe some of the major things you see when you're doing these taxes for these businesses that people are maybe missing or not tracking well enough, or I'm not even sure, but maybe that will guide you in the right direction.
Sure. I think one of the most basic things, and people overlook the importance of this, is just having some accounting. Even if you do it yourself, have someone else at least come in once a quarter, reconcile your books, make sure everything is in there correctly, it all looks good, and that the pro forma, your entire tax issues for 25, for example, quarter two is coming up to an end. So like Neal, if you and I weren't working together previously, you'd be like, hey, I want you to come clean my books up. Here's my wife's, most recent paycheck because she works and we have this many kids or whatever. And we would take a holistic approach and say, okay, I think you need to make at least an estimated tax payment to the IRS of X amount and this amount to the state. That's really important because a lot of people get caught up every single year thinking, I'm just going to put this money into a savings account and do nothing with it until I file taxes.
Hmm.
And it can be okay if you do it at a certain time. But by the time most people file taxes, it's past January 15th. It's, sometime February, March, April, or if they file an extension, it's later. You get a penalty if you don't pay a certain amount of tax by January 15th every year. So if that whole time you've been holding on to that money, sitting on it, doing nothing and not making those payments, you're going to pay a couple $100 or maybe even a few thousand, depending how much that penalty is, just for not paying on time. And I think that that's a crucial issue that a lot of small business owners do. They just don't know when to make payments or how much to make. And they're thinking, oh, I'll just save this money, put it in the savings account, make a couple bucks on it, not knowing that the interest rate that they're going to pay the government on that is higher than the interest that they're earning in
Hmm.
the CD. So it negates itself anyway, right?
Right. And is the general rule of thumb to just look at what you had to pay last year for your taxes and break that into the payments? Is that what do you
It
recommend for
can,
that?
if you have a steady business, your business is not in growth mode anymore. Your business is stabilized now. And whether you're single or married, that your overall household income is relatively similar to the way that it has been historically, then yes, you could use that as a predictor for what to make for the, estimated tax payments. Or if your payment, your income is going up and up and up every year because your business is growing, you're scaling, you're getting better at your profession, so you get more clients, then that's not going to be a really great way to estimate what do I need to make in payments or how much should I at least even set to the side to pay the government when that time comes, because it does come, and it comes faster than most people think. Like it's already halfway through 2025, I'm still filing 25 or 24 tax returns in September, and then 4 months later, I'm back in it again for 25's tax season.
Mm. Yep. Yep.
Yeah. I can't believe we're halfway through the year already,
I
almost.
know it's
No.
it's frightening. It's totally frightening.
Yep.
We're
Cool.
over the hump of busy season, unfortunately. I'm like, oh no, here it goes back down. Dang it.
And one of the benefits too of having someone, at least some type of professional come in and make sure your books are caught up and reconciled and helping you pro forma is the strategy of the structure of your entity. That I can't stress how important
Mm.
that is. Like you can sometimes it does make sense to stay as a sole proprietorship or a single member LLC. Those two things are the exact same. It doesn't matter.
Yeah.
But, for a lot of people, especially if you're making 60, 70, 80,000 plus a year and you don't also have a W-2 somewhere else, it makes a lot of sense to convert to an S corporation, which can save you a ton of money because self-employment tax.
$13,000. Thank you.
Yes. Yeah, I'll say I know we talk about that every single year. I'm like, hey, just so you know, this is how much we're saving now. So
Yep. I'm like,
like yeah,
woohoo.
self-employment tax is expensive, and that's the one that gets people, especially in their first year or two, if they're not working with somebody, that they just don't understand what that is. And it's expensive. It's 15.3% of your profit, and that's just Social Security and Medicare. You also still have income tax on the federal side to also pay on that net profit. So someone making, let's say, 75,000 a year, they're going to pay on Social Security Medicare almost $10,600 for that year plus income tax, which will probably be another, 8 or 9 grand. So they're gonna pay 20 grand on 75,000. That's an effective tax rate of like 26%. That's a
Hmm.
lot.
It's a lot. Yeah.
That's a lot.
So this is so the person helping with my taxes this year did mention that since myself and my wife are now in the business, that if we did S corp, that it could kind of separate the two, trying to keep it under that bracket of whatever that 90 grand is or whatever that you somehow get taxed less. But the other kind of difficult part there, as I understood it, was that if we did do the S corp, we actually have to physically, you have to, physically pay yourself
Yep.
monthly a
W-2.
salary. So if you don't have that liquid money like that, that could be a tricky piece. Is that correct? And could you explain
Yeah.
that to us?
So if you do convert to an S corp or you are currently an S corp, one of the IRS requirements is that you take what's called a reasonable compensation through salary or through payroll at least. It doesn't have to be salary, it could be hourly or whatever. It just needs to be reasonable. And reasonable is a very vague term on purpose by the IRS. It's based on a totality of circumstances. So it's not just this percent of your income needs to be reasonable. It's based on your levels of experience, years that you've been doing the work, what someone that's similar to you would be working and getting as a wage in a similar business or industry, a lot of different things, right? So, like if you're making, we go back to that $75,000 example, I would say a reasonable pay, wage to pay yourself would probably be around 40,000 in W-2 because you still need that 35,000 to also cover the income taxes that you're still going to also owe on the remaining amount and other liquidity and solvency in the company alone. Like you've got to have some liquid cash to pay yourself. But the whole point that people go to the S corp is if we go to this $75,000 example and you pay yourself a $40,000 W-2, the business is going to deduct that $40,000 wage because it was a wage. It's an expense. You're
Mhm.
not going to pay taxes on that income twice. You get a W-2 on 40,000, you're going to pay that on your individual tax return. If there were no other expenses, you had 75,000 in revenue and the only expense you had was 40,000 in W-2 expenses, then your net profit in that business with an S corp would be 35,000. You would get a form called a K-1. It's just like a part of the return that is done when you make an S corp tax return. You use that with your personal tax return because that passes through. So the S corp does not pay taxes on its income. The shareholders do on behalf of the business. Just like if you're a single member LLC and you're a sole proprietorship, Neal pays taxes on his business's income, not Neal Young LLC. He does, right? So it's the same concept. So you'd still pay income tax on that 35,000, but you don't pay any self-employment tax. And on that, on 35,000, it's only about 5 grand, which is 5 grand. 5 grand is still 5 grand.
Yeah.
But I mean, you can imagine as you scale that up much higher, and you're not paying self-employment tax on, say, $80,000, then you're saving every year just $11,300 just from that one simple thing of converting to an S corp, and that makes a tremendous difference.
Yeah, for sure. Yeah. Cool. Thanks for explaining that. Appreciate it.
Yeah.
I love the way you explain things. I always understand.
I try to make it simple, and that's always been one of my very major pet peeves of like my industry is that I don't know if it's everyone, but most of the other accountants I've talked to or other people I've had for clients that say, yeah, my last account was like this, is that they try to, I think, impress you so much with their knowledge
Mhm.
that they don't know how to explain it to you, and that doesn't help you, right?
Yeah.
And that's where I go back to saying, like, when you're vetting an accountant or anyone in any profession, if they can at least explain to you enough that you get the understanding, you're not a professional, but you get it. I think that that's really important.
Yeah. No,
Yeah.
totally. I think we both know. If you ever started to accidentally talk about like a camera setting in front of a real estate agent and watch their face just like slide off of their skull, like blah.
They just walk over and tune out. They're like,
Yeah, yeah.
"Oh,
You
Jen,
can
I'm
just
out
see
of
them.
here."
What?
Yeah,
Hmm?
the amount of knobs and buttons on like a DSLR camera, I don't know what they do. I just click the button.
Yeah,
I
exactly.
don't even know what half of them do. Shoot, no. Funny, I have a Sony camera for my podcast setup and I shoot Canon and the like focus got messed up on it and I'm like I have no idea how to even set the focus or what these buttons do. It's like a foreign object to me.
Yeah, it is. It's like it speaks a different language, right? Yeah, totally. Yeah. Oh, it's funny.
Is
Well,
there anything
cool.
else that you could think of, Neil, that you want to ask Brandon, or Brandon, is there anything else you want to chime in about?
Those are the main things I wanted to ask about the tax stuff. And I thought those are good recommendations to make sure you know, especially to know how that you could communicate with your
Yeah,
your tax person
for
essentially.
sure.
Because yeah,
I
I mean,
think,
sometimes you have to speak up for you. I've found in my
yeah,
experience, you have to speak up for yourself and double check, like, hey, did you do this? And that's what the part that frustrates me sometimes about this. I feel like I have to go, hey, did you also make sure you tallied this, or did you realize that those fees and PayPal, that was all to editors?
right,
Like, I'm like, well, at some point, a lot of times I think I get frustrated because it's like you get to that point where you're like, maybe I should have done my taxes at this point. You know what I mean?
right. And like, definitely make sure that you bring up questions to your tax accountant. Personally, I don't mind when people ask me. I kind of chuckle sometimes if I get someone that sends me like a TikTok's like, did you see this? They're like, did you know about this? Like, yes, I knew about this. Did we talk about it? No, because it's not going to work for you. I'm not
It's
going to bring up a
amazing.
bunch of stuff that's irrelevant for you, right?
Jeff
Or like with this
Bezos
guy,
moved to Texas. Can I
right?
do
Like,
that?
yeah, exactly. If you want to, yeah, go for it. But I don't think I'm going to recommend that to you. Move your whole life there,
You're still gonna
So
have to buy a house there.
exactly. There's other ways. And like the states that don't have income tax, they get their revenue. It's through other means. It's just not
Mhm,
income tax. Trust me.
mhm. Right, right,
Washington is a fantastic example of that with employer taxes. They have a tax for everything there.
right.
Yeah, move to
Interesting.
Washington.
Yep. I think one things I definitely want to make sure I chat about, and I don't think I talked about this the last time I was with you
Mm,
guys, is interstate commerce. So people that work like really close to the border of different states,
mm,
you need to keep track of the income that you're making in those states because you're going to have a filing requirement in those states. And depending on if those states also have like a service sales tax, you'll want to make sure you keep track of that. Most states do not have a sales tax on service, but some states do. And some states are very specific on which services they do, right? So, that's one of the other benefits of working with someone that's versed in your market, in your industry. Say, hey, like I'm going to go work in Idaho for a week because I got a client. I live right next door, and I'll be honest, I'm not great with geography. I think Nebraska is really close to them. If you live in Nebraska, but you're going over to Idaho to work for a week, that income, some amount of that income is allocable to that state, and you need to file more than one state income tax return. The
Mhm.
likelihood of a very small business owner getting audited by a state that they don't live in would probably be low. But the problem arises that if it happens, you're going to be in a world of hurt, especially if you make a lot of money. Like I live right on the border of Michigan. So like let's say I did travel, because when I first started off, I actually did. I used to travel to different clients' houses in my very first year of starting, trying to figure out how I wanted to model this industry. And I did go work in Michigan. I had to file Michigan state tax returns because there was times when I did go do work in the state of Michigan. So that is something that comes up for a lot of people. Not everybody lives in the center of the state.
Yeah. And some states are really small, so they work, their radius for 20 miles is going across two states. So
Yeah.
what is there two things about that? Is there a limit to that? Like let's say do they start at $500 and if you only made no, it's anything.
Right. So most states have what's called an apportionment method. It could be single weighted, double weighted, or triple weighted, and it depends on that particular state. So like usually they weigh it based off of if you have inventory in that state or if you have payroll in that state or just what your sales are. So like your real estate photographers, for example, the only thing they're going to have would be sales in that state. So it'd be what's called a single weighted formula. So they would take whatever that formula is, find out what percent of your income is allocable to that state, and they would just take that percent and apply it to your net profit and say, okay, 1/3 of your income for the year was earned technically in the state of whatever, even though you don't live there, but you did work there. Even if your sales were different than what that amount is, it's going to be a little bit different. And it gets very complicated if you work back and forth between 2 or 3 different states trying to do that on your own.
Hmm.
Because the other thing is, especially if you work in a state that has income tax and you also live in a state that has income tax, your state that you live in is generally going to give you a credit for taxes you pay to the other state. So you don't pay taxes on that income twice. And that's something that generally a professional is going to know to look for.
Hmm. Interesting. Generally.
Yeah.
Now, how should people find out if they work in an area where they do cross a lot of borders? Or should they ask ChatGPT? Is there a list of these somewhere?
Yeah, I mean, the worst thing you can always do, and sometimes I do this, especially if I'm like, I have some clients in Nebraska as a great example, like, but I don't have very many. I have like maybe a handful every year, that will work in Nebraska or start a business in Nebraska. So I'll just straight up call the Department of Revenue hotline, but hey, look, this is my client. This is what they're going to be doing. If you don't know, the best people you can talk to, the people are going to make you pay, right?
Hmm.
So like if you can't find someone that has a great answer, the worst thing you could do is just call the Department of Revenue, for example, say, hey, this is my business, this is what I do. I live in this state, but I come to or I plan on coming to your state to do some work. Do I need to register for any taxes? That's the worst thing you could do because they're not going to lie to you. They're going to tell you, yeah, register for this and that. And anytime you do talk to a government agent, make sure you get their name and their ID number if they have one, and make a little log, date and time that you call them. Because if anything were to ever happen, let's say that agent was wrong. And this has happened before when I've called the IRS, because I do a lot of calls for my clients on behalf of them to the IRS. They will give wrong information sometimes because they just don't know. So I always make sure I keep track of their name, their ID number, because if there's a penalty or something else that results from that, and it's from their agency telling you one thing, and you have that information, they can get rid of that penalty for that reason.
Even the IRS doesn't know how to do taxes.
Yeah. It's interesting because sometimes when you call the IRS helpline, the 1-800-1040 number or whatever, not every representative you get is going to be as great as the next one.
Hmm. Interesting. Yeah. Yeah.
Good
Oh
question
boy.
for you,
Oh
Brandyn.
boy.
How do you stay up on all of the laws? Like, how do you keep current on everything?
Yeah, it's tough. I do a lot of research. I do a lot of nighttime leisurely reading, which sounds super exciting to read, like, 1,000 pages of the big, beautiful bill, for example. Or like, especially when tax season comes up, I'll pull up whatever the state's version of a 1040 would be. So some states do call it 1040, some call it a 104, some call it whatever, right? I'll just read the instructions. I'll go through and say, okay, what's changed from this year to last year? Because like I have a lot of military clients, and sometimes military retirement, for example, just became non-taxable in the state. North Carolina or Virginia is a really good example of that. Like in 23, it was all taxable. Now in 24, like there's a portion of it or some of it may not even be taxable at all. So I got to keep up on that because I have clients that live in every single state.
Wow. That's
You
Yeah.
gotta
I
find.
do
You
a lot
gotta
of
find.
reading.
You gotta find somebody who loves this tax stuff as much as you do, my friend. Holy
Brandon's
crap!
a super nerd. I'm just
Yeah.
gonna
I
say
am.
I love it. Nerding
He's
out.
like, yeah, you just might read 1,000-page document,
I would die if someone asked me to read that. I'd be like, I am not gonna
It
understand.
is very dry.
You have a love and a passion for it, so
It's
it's
very
probably
I
interesting to
do.
you. It's great. That's why we hire you, right?
They don't
Yeah.
put a lot of flair into the 1040 information. It's
No,
not
not really.
no poetry in there.
Nope.
Uh,
No haikus or anything.
no haikus. That's a bummer. Lost opportunity there.
Right.
Well, I don't know. I think that's my questions for now. We can always have you back another time, especially if anybody who listening has additional questions, they should reach out and let us know because we'll have you back on. Ask you some more questions, as soon as we got some for you. Does that sound good?
Yeah, awesome. I always love coming on and just hanging out and chatting with you guys. I could talk about this stuff until like 6 in the morning, but I'm sure you guys got other things you want to do. So
Yeah, well, taxes, they're fun. I think everybody just can't wait for that time of the year. It's like
yeah,
Christmas, and then you're like, "Ooh, the next thing, taxes."
right, exactly. Get all, giddy.
Yep, absolutely.
So, Brandon, are you taking on new clients this year?
I am. Yep.
Okay, awesome. And how can people find you?
The easiest way is go to my website at bmctaxllc.com, and right on the homepage, if you scroll down, there's like a little contact me thing. You can type in some stuff. All it's going to do is shoot me an email, which is great because email for me is already just really the only way I like to communicate. I'm not a big fan of text messages. Some years ago, I don't know maybe it's just my phone, but Android used to have a thing where like if you had unread messages, it would say at the top and you can click it, it would show you who's unread, kind of like Gmail. Now that's not the case. So like every week on usually Saturday or Sunday, I'll scroll through my text and make sure I didn't miss anybody and forget to talk for a week. So like if you text me and you don't hear me for 4 or 5 days, that's why.
Okay. I
Yeah.
texted you today, and you're usually really good at getting back to me, but I was like, he's probably busy. It's
Yeah,
fine.
I seen it. I was like, I'll chat with her later tonight, or I'm gonna see you later
I'm gonna
anyway.
see her on the podcast.
Yep.
Yeah.
I know you have a
Awesome.
lot of clients. You're a busy man. You got a family, all the things.
Yes, 5 kids. I'm very busy.
You have 5 kids now? Oh
I do.
my goodness. Are you done? Are you gonna have
Wow.
more?
What's that?
Is that just for a tax credit?
You know what sucks? Like, not to my horn, I don't even get the child tax credit now, so it kind of sucks.
I was gonna say that's how much he loves these taxes.
Yeah, but no,
That's
I'm not
awesome.
having no more. I made sure of that many, many years ago.
Awesome.
Amazing,
Well, guys,
amazing.
it's pretty obvious that Brandon knows what he's doing. So if you need an accountant, he's been fantastic for me and sounds like he is taking new clients. So reach out. It'll just take that one thing off your plate that's just annoying and hard and confusing. So
Hmm.
great.
Love it. Awesome. Thank you so much. Good to see you.
Yeah, appreciate it, man. Take care, guys.